We saw that the main source of negative impact on the single currency in the past week were the worries about the future of Deutsche Bank. I can quickly give you a sum up of what is happening with this bank. The problem is that the US Justice Department is demanding the bank to pay $14 billion fine to settle civil claims related to the dealings of this bank in mortgage-backed securities. There are reports that hedge funds started to withdraw money from Deutsche Bank, and it seems that the bank is now doesn't have enough money to pay this sum. It is going to battle with US Justice Department because it doesn't want to pay this amount. And traders are still worried that the bank won't have enough money, and it seems that German government is reluctant to provide financial help for this institution. It would be a political suicide for Angela Merkel, German Chancellor, to make this bank to give the money of German taxpayers to this bank to help it and give it bailout. So without support from government, the outlook for Deutsche Bank is really risky. Of course, there are possibilities that the bank will take some liquidity from the European Central Bank, but for now, no big announcements are made, and the future of this institution is still uncertain. Of course, there is great speculative pressure on Deutsche Bank, but this is clearly a risk factor we have to take into account. Still, we can see that despite this negative factor, this big scandal with German bank, the euro is rather resilient. If we look at the weekly chart, we can see that euro dollar even managed to close above 100-week moving average, which is currently located at 1.1212. And despite this long lower shadow, still the weekly close was rather positive for the euro dollar. Still, there was one case several weeks ago when the pair closed above this level, but this line, but didn't continue its way to the upside. So, in my opinion, the single currency is still vulnerable. We didn't see a stronger decline of the euro in the past week because German yields are rather high, while the US yields are on the downside. And still many investors think that somehow Deutsche Bank will survive, and that this bank is too big and has too great importance for the whole system of the European banks, so that somehow its problems will be resolved. So we don't see this panic have a truly big impact on the euro dollar for now, but in my opinion, the pair is still vulnerable, and still we can't consider the fact that there was rather positive close last week. We can't consider it to be the signal that we see the breakthrough to the upside here. Still, we can draw a resistance line from April highs connecting the recent August-September highs, and the pair is still lower and may still decline a bit. And if we look at the monthly chart, we see that the euro dollar remains in this kind of trendless situation. There are some positive signs, but no certainty that we will get strong moves and strong moves to the upside. The 50-month moving average has come dangerously close to 200 month moving average, so this can produce a negative signal in the long term. If we come to the daily chart, you can see this pivot point multi-frame time frame indicator I have put here. This pivot point for the pair is now located at 1.1223, and as long as we stay above this level this week, the picture will remain positive for the euro dollar. Below this level, the bears will get in control. On the upside, we are watching the level of around 1.1255. This is resistance line drawn through August-September highs, and then the first pivot resistance line, which lies just below 1.13 mark. The next resistance is at 1.1350. If we look at the Eurozone's economic calendar for this week, it is rather empty. There are some final PMIs, ECB monetary policy meeting accounts, but we don't have the market moving data for the region. So technically, there is positive signal. 50-day moving average went above 100-day moving average, and this is a bullish golden cross. However, pay attention to the fact that the moving averages are still mainly horizontal, and we don't see any strong momentum in this pair. It has already spent much time consolidating and moving in a more or less sideways range. And this situation may continue if the euro approaches 1.13 mark. I think that sellers will materialize. Those who think that the current situation is too unstable for the euro will enter short positions, and this will prevent the currency from gaining too much. On the other hand, we see strong support is located at 1.1170 and a bit lower at 1.1150. We have 200-day moving average around 1.1160, and these levels are guarding the euro on the downside. Next support will be at 1.11. The 4-hour chart tells us that probably the current move to the upside is over, and we'll get a period of consolidation below 1.1250 and maybe a test of lower levels in the coming session around 1.1217, 1.12. Here is what I wanted to tell you about the euro. I think that the drivers for the pair this week will be Deutsche Bank saga and US non-farm payrolls. All in all, data released in the euro area last week was mixed. German IFO business climate index exceeded expectations. The region's inflation rate increased more than expected. So all in all, the euro is supported, and probably the biggest reason why we don't see a sell-off in the euro is that there are no aggressive statements or actions from the European Central Bank. And as long as Mario Draghi doesn't say something really new, something that will increase the ECB's stimulus program, or as long as he doesn't downgrade the forecast for the euro area dramatically, the euro should remain supported. We know that European banks are currently repatriating money from abroad to the euro area, and in general they don't invest money abroad, which keeps the amount of liquidity in the euro area high, and this is supporting the euro.